Tracy, good to see you again. Thank you for being with us. There's a whole lot of things in here, one of which is Austan Goolsbee from the Chicago Fed. He's the Chicago Fed president, somebody we've had on the show a lot. He said that the goal is to get inflation down, and he calls this a golden path. If you can get inflation down without triggering a recession, that's the so-called golden path. He says, I feel like we're on that golden path now. Your thoughts?
Yeah, I mean, this is the proverbial glide path to the soft landing, isn't it? And I'm seeing more and more economists, investors, and traders talk about the possibility that the Fed and the wider authorities have actually pulled this off. As you point out, this was a slowdown. I think this was the smallest advance that we've seen since the beginning or late 2020, something like that. But that is after 30 consecutive job gains, which is a pretty amazing run. In fact, we've seen, I think, 14 months of the job reports coming in more than economists expected. So this is a slight slowdown, not a disaster for a central bank that is trying to bring down prices, bring down some of the overheating in the labor market that you and others have been talking about for a long time. This is a pretty good report.
In fact, traders and economists think it's good enough that the market was down today because they're worried that the Fed will now resume raising interest rates after doing so 10 times because they're worried low unemployment, more jobs created, higher wages creates more demand creates more inflation. So in fact, they're looking at this as, this is still a hot labor market.
Well, I think we're back to the old good news is bad news for markets paradigm, where people start thinking that if you have this continuous run of better than expected, I mean, this wasn't better than expected, but still strong economic growth, you're going to see the Fed raise interest rates even more. And this gets back to the main challenge for the economy now, which I think is that one of the reasons why these jobs reports have been coming in so much stronger than economists have expected for many, many months is because we've seen companies behave in an unusual way. So post-pandemic, it feels like everyone internalized this idea of labor shortages, supply side constraints. So everyone started hiring a lot of people in order to have enough capacity
and hoarding
as the
them.
Economy reopened. Absolutely. Labor hoarding. And so that was kind of unusual. So what we're seeing now is maybe people are backing off from that a little bit. If you look at the restaurant sector, for instance, you saw 1,000 jobs cut before. I think in Q4 of last year, it was something like 50,000 jobs added. So restaurants starting to normalize as the economy reopens. The big question is whether or not people are going to just sort of, I guess, get back into balance and then keep going, or whether or not people are going to get back into balance, realize they've overhired potentially by quite a bit, and start cutting jobs. I think that's the big question for the economy right now.
I think this is an important question. You pose it very well. I want to just quote from your own article, which is what you've just said, but it's a little bit more here. There are plenty of signs that the U.S. economy is genuinely strong right now, but a labor market built on expectations of a future recovery is going to be one that is also vulnerable to sudden shifts. So you're saying a lot of this hiring, legitimate, but people have been hiring because they think in 6 months it's going to be much stronger and then they won't be able to get workers. So they're getting them now. And if anything turns around, they'll find themselves with too many workers on their hands.
That's exactly it. You need activity to keep going or ideally improve to justify some of this hiring. But again, I don't want to downplay the trajectory of the jobs gains that we have seen so far because, you know, for 30 months, we have seen this momentum continue. And it's not entirely clear what would be the sort of turning point that would make all the businesses wake up tomorrow and realize, oh, actually, we've massively overhired. Interest rates are obviously a worry here. There is a chance the Fed sort of, I guess, scores an own goal in some sense. If it feels that the economy is too strong, it needs to raise rates even further. And then businesses start worrying about things like interest rate costs, borrowing costs, and maybe future investment capacity. Then they start cutting workers. That still could happen. But I really don't want to underplay that for the past year or so, the economy has been doing much better than a lot of people have been predicting.